Hi, today I researched the financing and the co-signing of ChatGPT's loans by Nvidia, and also looked at any other entanglements that exist between these AI labs and them leasing compute from each other and things of that nature. And so that's what this episode is about.
You've probably seen the headline, Nvidia loans OpenAI $250 billion. That's not what's happening, and the actual word matters more than the number. 3 words, 3 different things. Invest, you own a piece, you share the upside. Lease, you pay for capacity over time, no ownership. Guarantee, you promise to cover someone else's debt if they can't pay it themselves. Nvidia isn't handing OpenAI a check. Nvidia is in talks to be the co-signer. Here's the deal on the table. Nvidia is in talks to guarantee roughly $250 billion in lease and construction debt, so OpenAI can lease a 10-gigawatt data center campus in southern Ohio, being built by SoftBank's SB Energy. Separately, Nvidia's also in talks to finance up to $350 billion of the chips that go inside it. Combined, the whole project could top $500 billion, and neither number is signed. Both are talks. Both could collapse. Here's the detail most coverage skips. That campus sits on federal land, a Cold War uranium enrichment plant the government ran for decades, now rebranded the port's technology campus. The Department of Energy announced the public-private partnership in March 2026, standing next to SoftBank's people. The local utility is already spending $4.2 billion on new power lines for it. So why does Nvidia need to guarantee anything? Because OpenAI doesn't have investment-grade credit. It can't borrow this cheap on its own. Nvidia's balance sheet does the co-signing that Wall Street's own debt markets wouldn't. Ohio is talk. Here's a loop that's already closed. In February 2026, OpenAI raised $110 billion. Amazon put in $50 billion, Nvidia $30 billion, SoftBank $30 billion, at a valuation near $730 billion. Same announcement. OpenAI committed to spend another $100 billion on Amazon's AWS cloud. Amazon is investing in OpenAI, and OpenAI is paying Amazon back out the other side. The same dollars, moving in a circle, with 2 different labels on them. It's not just Amazon. Microsoft owns 27% of OpenAI's for-profit arm and gets a $250 billion Azure commitment in return, though it lost first right of refusal on OpenAI's newest workloads, so it's not pure lock-in. Amazon separately holds up to $33 billion in Anthropic, which owes a $100 billion plus over the next decade. And Nvidia isn't picking a side. It's invested in OpenAI, in Anthropic, and just this week put roughly $5 billion into a third lab, Ilya Sutskever's Safe Superintelligence. Same investor, 3 competing labs, all buying its chips. Not every company in this web can absorb a stumble the same way. CoreWeave, one of the neoclouds renting out GPU capacity, is spending $31 to $35 billion this year against roughly $6 billion in revenue. On July 29th, the credit market that insures CoreWeave's debt priced a 50% chance of default within 5 years. Some of that debt sits inside pension funds. Oracle's in a similar spot. $300 billion of its backlog is a single OpenAI contract, nearly half of everything Oracle has on the books. This isn't just tech bloggers being dramatic anymore. In June 2026, the Bank for International Settlements, the central bank for central banks, named circular AI financing as a structural risk to the global financial system. Months earlier, Senator Elizabeth Warren wrote Sam Altman directly after OpenAI's own CFO floated the word backstop. Altman pushed back publicly. OpenAI, he said, doesn't want government guarantees for its data centers, and taxpayers shouldn't cover bad business bets. Fair enough. But that Ohio campus already sits on federal land, with federal officials at the ribbon cutting and a utility-backed grid investment attached. The company says it doesn't want a bailout. The infrastructure is already partly public. The stock market isn't treating everyone the same. Nvidia's still a $2 trillion class giant. Oracle, CoreWeave, SoftBank, and SpaceX are all deep off their highs, down 40 to 60%. That's the market pricing execution risk and leverage, not writing off AI as fake. Here's the other side, on the record. Nvidia's CEO Jensen Huang, responding directly to circular financing criticism. The capital Nvidia provides is only a portion of the total funding these companies ultimately need to raise. The notion that it's circular is preposterous. And OpenAI's revenue is real. It just quietly reset its own spending target from over $1 trillion down to $600 billion by 2030, which is either a company getting more honest or a company admitting the old number never worked. Both readings are on the table. This is a different story than the AI layoffs piece, spending, not headcount. Is this normal vendor financing at a bigger scale, or something the public should treat differently? I asked the squad. Normal vendor financing at unprecedented scale. Chip vendors have always guaranteed leases to drive hardware purchases.
Closer to systemic risk. Concentrated guarantees linking chip supply to lease obligations amplify interdependencies beyond standard vendor financing.
Lean systemic risk. The scale and interwoven guarantees create concentration and contagion risks far beyond ordinary cloud deals.
Systemic risk dressed as vendor financing. Nvidia's balance sheet, not the markets, is now pricing OpenAI's credit risk.
If one of these loops unwinds, who cracks first, a leveraged specialist or a diversified giant? A levered specialist, concentrated exposure and higher default pricing, already visible in credit markets.
Levered specialist, higher debt exposure and narrower revenue streams make them more vulnerable to defaults or guidance cuts.
A levered specialist, concentrated revenue and high leverage make them inherently more fragile.
The levered specialist, CoreWeave's default swaps just priced 50% odds against $6 billion in revenue. Hyperscalers have profitable cores to fall back on. CoreWeave doesn't.
None of this is proven fraud. None of it is a Ponzi scheme. It's vendor financing, stretched further and tangled tighter than it's ever been stretched before. The same dollars, counted on more than one balance sheet at once. Whether that's fine or fragile depends on every single one of these loops holding at the same time. One senator already asked what happens if they don't. Nobody's answered her yet. If you want the numbers and every source, they are in the description. Like, subscribe, and I'll see you in the next one. Like and subscribe if this map helped. Sources are in the description.